Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for one wild trading day for Wednesday, the 4th of May, 2022. Okay. Tomorrow we're going to have the live webinar. It should be a lot of fun, but I'm not going to put the links up today for it. You'll have to watch in the morning or go back and look at my yesterday end of the day or any of the videos that we put out, because the link is there when you go to the very top. Today it's going to be about, when I put up the link, that people should be in this video taking a look, maybe becoming a subscriber for the morning updates, because there's so much activity right now. Fed Chair Powell pulled the rug out of traders. You know how many people have been talking, we're going to get 75 basis point hikes, we got to get the Fed ahead of the curve and so on. Well, the Fed doesn't think they're that far behind the curve, according to the Fed chair. He says that with a 10-0 vote, that the Fed is behind them, the members. They are looking at no 75 basis point hikes right now, none. They're looking at the potential June, maybe July 50 basis point hikes. Then they'll assess. Why? Because the way the calendar works, after we get through July, we don't really get another FOMC meeting till September. That gives a lot of time to digest the data. The Fed chair thinks that inflation will peak here and it will start falling back into the marketplace. You know, he made very clear mention you can't make up for things that the COVID has done, that the Ukrainian war and the pressures it's added to supply chains and the like. But he also said very smartly, the Fed has no control over supply. It can control demand. How? With one tool, interest rates, making it more expensive to the point where you don't buy something. And that's called the demand part. Keep that in the back of your mind, because that's what they are watching. And that's what you have to watch. So what did the market do? Once you go into these and you're assuming that, okay, nothing really out of the statement, the market didn't react much to the written policy, hits his press conference where the market went bananas. And the questions were glaring. Steve Leisman asked a brilliant one. What about 75 basis point hikes? No, they're off the table. They're not up for discussion right now. The Fed is content with 50. If they need 75 down the road, it'll come back. But they gave you a clear sign. Nothing between now until September is a 75 in size. End of discussion. One man makes that policy. He listens to everybody, but he decides. So when you go to the S&P, you're getting a bounce on a weekly chart. Why not? That's good. The Fed chair also said that, he thinks that wage pressure is going to slip a little bit. I write about all this tonight in my market letter, so I've given everybody all this already. Did we take out prior highs? We did not. You rallied up into this resistance point and didn't clear it. So you still have the pattern of lower highs, lower lows, the resistance of the market right here at the 18-day average of closes. You can see that. You didn't punch through it. So you had been riding the lower band. You got away from it yesterday, and today you give yourself the pop. And momentum, which had been oversold, comes out of the oversold condition. Neither number's under 30 anymore, so you're not oversold. Will you attract selling? Here's the big question. And the yin-yang impact's going to happen. Remember, when we at 1 o'clock in Chicago and 1:30 get our statement of the policy, and then 1:30 the press conference, what time is it in Japan, other parts of Asia? The people are sleeping. In Europe, they're out to dinner at 6:30, 7:30, depending where you're at in Europe. They're not sitting at their trade desks, and most people aren't looking at the markets at that hour. They're watching the Love Boat. You know what I'm getting at. Things of that nature. So that's what is going on. So we'll see how the markets react to all this. I can understand that the market got exuberant on that, and in the U.S. pulling back, but we've yet to see those other reactions. In the NASDAQ, you had a market that had been embedded. And all of a sudden, yesterday we had the warning. I was here with you saying, if it doesn't immediately get it back, and I'm talking immediately, get back under the 20 reading, watch out. And if you take a look, the market didn't do that. It opened steady, fell back, and then came right back up, and that's all it did. Okay, So you're no longer in that downtrend. You have an uptrend, which is a contra-trend move, because you're under the 18-day average of closes. Look for resistance at the 18-day average of closes. In the Dow, you're at the resistance, and you broke through this high right here, and in doing so, you negate this whole downtrend. That leg of the market is gone. It's bye-bye. Does that mean a new up leg? No. You have a pattern of a lower low, higher high. You've been oversold, so you're neutralizing that. And the same identical thing in the Russell. So I'm not excited about bullishness, but I have no reason to be bearish right here. In the VIX cash, what did we talk about? I said if you break down, momentum had turned down. If you get through 2,800, look for the 18-day average because you'll have broken this uptrend that was just a flip-flop of the stock indices. Tell me what happened. And look where you're pretty much stopping. In the T-bond market, this is a pattern you have to watch. When the Bollinger Bands narrow in dramatically and start going sideways, you start churning. What the market is saying is that the action in the long term is priced in everything. It's probably just going to spin here for a while. That's what I think it's going to do. Where you get more of the action will be in the 10-year, but the 5-year, the 2-year, that's where the Fed's thought processes are going to be felt. In the dollar, once you did that and you said, hey, we're maybe not raising interest rates that much, you took the punch bowl away for the strength in the dollar. That dropped, and most currencies got themselves a big rally, losing their embedded readings all over the board, one after the other. And that's the danger of going through these big reports. And you know, I tell you that all the time. If you're going to go through them, pick a reason why you're doing it. But for the average person, in my charting course, I teach, no, you don't do that. If you're going to do it, make sure that you've already taken maybe some big money off the table in the trade and you got the other half riding. Maybe you break even at the worst, something like that. That worked out today. Not bad thinking. Bitcoin came right back to the resistance area, the 18-day average of closes. It rallied with the stock market, but like the stock indices, it's slipping back tonight. On the energies, the differential between Brent and WTI continues to narrow. But look at this rally. You realize how much you were up today? You were up nearly 5%, up $5 in the energy, and it's still looking good. It's not overbought. Momentum is still looking solid. Same thing in the WTI. The heating oil, a dramatic gain today. The market up 14 cents. I mean, that's big. And still moving, still embedded, still bullish. What else can I say? And in nat gas, I'm going to repeat, you don't buy over Bollinger Bands. That's what I teach. You can do whatever you want. But generally, you can do better. The market can ride it for a while, but it generally gives it up and gives you a zone to come in on your better terms, as I'll call them, than this. Am I long-term bullish? Very. Why? Well, let me spell it. EUROPE. They're our big customer now. They want everything we can send them in natural gas. We can do that easier than oil or any of the refined products we have. So that is what I like about it. It's easier. The terminals in some of the countries are there. They want the shipments, and we have the product. Now, in the morning, and it's going to be a big morning for me tomorrow, we'll be reviewing, did you follow through? Did Asia agree, disagree on Europe with Asia, and what the U.S. did? Are we going to get flip-flops of today? Are we going to get follow-through? Are there going to be chart setups that you work with? It's going to be a really important update. So how do you get it? Well, it's simple. You go to our website, and under the words research, that's where this all is. It's that simple. And in it, you'll discover I cover about 40 charts every morning, Monday through Friday. Saturdays or Sunday, I will put out a weekly version of this so you get to see the bigger picture. How do you get there if you're not at the website? Just take your cursor, push it up here, and away you go. You'll see it. Click on that link, take you right to the area you need. Enjoy it. I'm Ira Epstein. You have yourselves a good day. I'll talk to you tomorrow.